Good morning, and thanks for joining, everyone. My name is Christine Short, and I'm VP of Market Research at TipRanks. And this week, retail earnings season really kicks it into high gear. We're getting results from everyone from the department stores, discounters, off-price retailers, home improvement, luxury. So we're going to get a really good idea about the health of the U.S. consumer. To help us break it all down today, we have Jeremy Baksht of Essential joining us. He's going to go over some of the names with us. Thank you so much for joining us this morning, Jeremy.
Hi, my pleasure. Thanks so much for having me. And I don't know if most of you have heard of Essential. We're actually a public company. We have 2,300 employees. I lead the alternative data division. So we create great data landscapes and consulting and advisory for financial services clients. So delighted to be here with Christine and all of you, and look forward to walking through what's happening in this industry.
And they have some great data on retail. So Jeremy's going to walk through some of this with us and also kind of provide a picture of what's going on in retail, who's going to come out of this pandemic, okay, unscathed. Well, probably no one unscathed, but who's going to come out maybe stronger? What lessons have we learned over history? Let's just look at the names that have already filed for bankruptcy, mainly within department stores. We've got Stage Stores, you got Neiman Marcus on Friday, J.C. Penney. So this is a trend that's really been continuing for really the last decade, but it took this pandemic to really topple some of those names. Many analysts are now talking about Macy's, Nordstrom, some of the other names that might be on the chopping block. Jeremy, I'd love to hear from you. What's kind of going on in this space right now? Which retailers do we like, or what are good examples, and what should we be looking for?
Yeah, no, happy to talk about it. And what's most interesting about this business is it's very macro and micro. So on the macro side, we've all been sitting around hoping for a V-shaped economy, some sort of recovery quickly. But as we know, the U.S. is macro based from a consumer perspective. If we're spending, we're going to be feeling good. The chairman of the Fed, Jerome Powell, said over the weekend, it might take a while for the economy to recover. It could stretch to the end of next year. We really don't know. So with that as a backdrop, if we look at consumer spending last month alone, we had a record low, really in the last 100 years since the last pandemic. So if you think about the 21.5 trillion of GDP, 68% is personal consumption. Clothing this year, particularly the last month, had the biggest hit. It was down 78.8%. So we have winners and losers in this category, but the whole category has been absolutely under siege. Electronics and appliances were down 60%. Furniture was down 58%. Sporting goods were down 38%. That was just last month. And as you know, it takes a few months for people to reshape and reform habits. Some of these customer shifts are permanent, some are not. So as Christine mentioned, this is an accelerant to a lot of the trends that were already happening. So when we advise our retail clients, we talk a lot about the three R's. So if you're a department store, you need to reshape your channels. You need to understand online and offline one-click retail with fast picking and fulfillment and shipping. Walmart and Amazon have figured this out. Some people call it the Walmazon effect. Walmazon is really challenging these businesses. So understanding the channels and fulfillment are huge. Reimagining the store. If you're going to have a store, you need to understand new behaviors, how to personalize marketing, how to tailor your marketing, which wholesalers you're working with. If you're a Macy's, are you going to get the best brands? Nike actually used to have 130 wholesalers. Now they're down to 80. They purposely, by design, will only be at select folks like Farfetch. Farfetch might get some of the higher end, but they won't get everything. So reimagining the business is critical. And then repositioning. Before COVID, retailers were already kind of rethinking their layouts and trying to have less inventory, so it didn't feel like a warehouse. They were having a little bit of a heartburn around total number of stores. So already closing stores, trying to get more flagships, trying to get more experiences. In a post-COVID world, what's working? Everything, we call it above the keyboard. So everything above the keyboard is working well. So somebody like a Brooks Brothers is incredibly damaged in this environment. Brooks Brothers is private. It's owned by the son of the founder of Luxottica. Who's going to be buying suits, right? I mean, maybe you're buying some dress shirts, but nobody's really buying any slacks, particularly now. So it's less about inventory. It's more about merchandising. So I guess back to the winners and losers. Christine, we had a really nice chart. You and I were just talking about Nike. One of the realities for these.
Yep.
Cool.
I got it
okay.
Up. I'm
so
looking at the SKU and product counts. Yep.
Perfect. So as you think about the runway, most of high fashion is based on, introducing new concepts every season, and it includes like fashion shows and so forth. A lot of the commitments to this year's fashion shows aren't going to happen. So some businesses are doing online fashion shows, some retailers are not. But at the end of the day, I think Nike is one of the biggest players in any category, but certainly in this category, their product introduction level is outstanding. They're introducing new products, net new products every day to their website and to their wholesalers. And I think that keeps it really fresh. So I think the product counts are important to watch for these types of companies. And then the other component is pricing. So as we know, luxury is about status. So if you're wearing a Burberry hoodie, you better hope that that maintains its value. If nothing else, increasing value is better than discounting. Nike is the same way, even though Nike is not as high on the top end luxury side. Maintaining prices at both the entry level and the higher level for them is critical. They want to be perceived as a status brand. And that, frankly, that comes down to the bottom line and improves margins anyway. So I think back to Christine's original question, who's winning and who's losing? J.C. Penney, James Cash Penney started that business more than 100 years ago. It's sad and tough to see these businesses so challenged. But somebody like a Macy's right now, which is close to the wall, if they don't open up stores soon, A, nobody's visiting, and B, their merchandising isn't as fresh. So I think Macy's is going to be pretty challenged going forward, as are many of the department stores. You probably have seen with like Neiman Marcus, for example, already had announced they were closing last call. Having the discount and off price is not necessarily brand accretive for these folks. So they'd rather not have discount retail outlets. So I think it's sticking to the core of the product innovations, keeping price points high, keeping merchandising fresh, and then also having a lot of other winners in a category. If Amazon's offering everything, including groceries, it's good to understand your customer and know how to keep them sticky. And some of these very focused retailers like a Lululemon are really good at athleisure. There's no reason why they can't get more into some of the home fitness stuff and dumbbells and other things. You're already in the store or you're already on their online store. Having that merchandise to be able to pick up and keep the ticket sizes bigger is critical.
Yeah, and we saw that trend, unfortunately Under Armour, athletic apparel, and, with Nike, Lululemon suffering here. But to your point, home gym equipment through the roof, names like Peloton and, certain items at Dick's, not Dick's overall, Nautilus. So a lot of those names did well. I saw some evidence that sneaker sales were up, but athletic apparel, I think the only thing I saw was sweatpants were doing a little bit better, but that was more as a result of the work from home uniform now being sweatpants. So we'll see if Lulu and some of the other athleisure names can benefit from that. You mentioned, we were talking a little bit about department stores. I want to jump real quick to a screen here on Macy's because we do have a lot of the big names, Macy's, Nordstrom, Kohl's reporting this week. And as you can see on tip ranks here, best analysts on our platform calling this a moderate sell. I think there's maybe only 120 names on our entire site that are considered a sell. Analysts tend to be a little more optimistic. So to see this as a moderate sell with a price target of $5.38 doesn't leave you feeling too confident ahead of earnings. That kind of brings me into the next kind of big space that's reporting this week, and that's the discounters and off-price retailers. You mentioned Nike being really selective about where they're selling into, and they're probably not wanting to sell into department stores. Look, the department stores are canceling orders like crazy right now in order to be solvent. Something like a TJ Maxx might be more favorable to brands like Nike, Ralph Lauren, some of these higher end brands. And we've got TJ Maxx, Ross Stores, Burlington Coat Factory all reporting this week. The trend coming out of the last recession was from 2009 really up until this year, all these names' net sales have just been skyrocketing. So increasing year after year as people really focused on value, bargain hunting. And I think, the biggest thing against them right now is they don't have an e-commerce presence. I guess department stores technically do. It's not very good. But these names don't have any e-commerce presence. So they're kind of in a hole right now. But a lot of analysts saying that this is where the strength is going to be coming out of this pandemic. Once stores start opening up, TJ Maxx, Burlington Coat Factory, and Ross Stores are going to get a lot of traffic as people return to that hunt for value. And you can see here, I think they're all considered strong buys right now on tip ranks. Best 7 analysts, consensus price target of $66.43. That's 32% upside. And I've looked through a bunch of these notes, and it is for the reasons that I just said. They're looking at the trend over the last 10 years. They're getting more of those high-end brands. They are more nimble with their inventory, so they're not holding a ton of stuff. So we're going to be looking for those names that report mostly Wednesday and Thursday of this week. For first quarter might not be great, but the outlook for the second half of the year, all dependent on April really being the low here. That is the one thing most analysts said. They want to see that Q1 was a bottom and that things sort of start to open up and pick up from here. So taking a look at these off-price retailers, and then just to kind of go complete 180 from that, you mentioned luxury, Jeremy. And luxury is a space I think a lot of people wouldn't consider to maybe be potentially doing well out of this crisis. And you did share kind of a ominous chart with me that shows Cathay Pacific and how, yeah, this doesn't look great for luxury. Although I will talk a little bit about Farfetch. You already mentioned it, and how they had some success last week. But for the most part, right now, let me just get out of this chart and show. So Cathay Pacific, obviously flights way down. And so this is important. Why? Well, we know a lot of luxury sales depend on the Chinese economy doing well. The Chinese economy has been in lockdown, but now they've been open for the last couple of months. But the statistic was that they tend to buy luxury abroad, right, Jeremy?
Yeah, it's interesting. If you think about where the growth drivers are coming for these luxury categories, you have more than a billion folks in Asia generally, and then specifically as they travel abroad, they're able to buy different clothing, different apparel from these Monclers and Burberrys, and then they also get to sometimes avoid some of the heavy taxation or import duties that are put on by the various European constituents. So if you look at what's happening in China, it actually, as the lockdown occurred, a lot of that impulse buying and travel shopping wasn't happening. We actually have China's 520 holidays coming up this week. So it'll be interesting to see what the pull through is for Chanel and Louis Vuitton. In fact, we have a lot of price and promotion data on our platform, and we see Chanel and Louis Vuitton are actually raising prices, prompting huge crowds at stores to try to pull ahead of this. So every time they announce sort of new price ups or they're putting new SKUs out there, a lot of folks run to get last season stuff as quickly as possible. And they don't even rely on discounts. They just know if they get it now, it's better. So without the travel component, you really see them crowding into stores, which the post-COVID crush is a little bit scary. But with Chinese New Year money and Valentine's Day money sort of in their pockets, they can't wait to get out there. If you look at Gucci, one of the things, Christine, you and I were talking about is Gucci's recently made the decision to not rely on wholesale at all. So the label's actually generating 85% of their business through their own stores and direct sales. I think you're going to see more of the top line, like the Pradas and Louis, not even go through a Farfetch or a high-end intermediary. In fact, if you look at Moncler, it's one of the ones that I like to talk about, as even though it's outerwear, they've really moved into becoming like a dominant franchise because their superior design, time to market speed, management really just knows how to move through the supply chain quickly. And they even are getting more into kind of athleisure and sort of, they don't want to be known as a jacket company. They want to be known as, a prominent player here. So it's interesting. One of the aspects of fast fashion that we talk about is even if you're not ultra premium, at least you can move fast. So whether that's Zara or Boohoo, having your own exclusive branded product that can move fast with shorter runs actually makes the business even more desirable. Boohoo is one that's really used influencer marketing. They've got the Kardashians and a few other serious influencers wearing their stuff. So if they make these short runs and they have influencers wearing it, it's going to be moving quickly off the shelf. So I really like the luxury category in general. I think Italy's fashion industry, for example, typically stands around 65 billion or so a year. To some extent, that might shrink a little bit because of the last 2 months, but I think you'll see a recovery quickly. So LVMH, Kering, some of these higher end groups are definitely ones to watch as we go through this cycle. It's interesting if you look at what's coming out this week. Back to the discounting theme, Christine. I was just looking at Victoria's Secret and Bath and Body Works. L Brands owns those two businesses. And one of the aspects we're seeing is private equity getting more interested in buying these companies or, splitting them up more quickly than the bankruptcies are getting ahead of it. Sycamore Partners actually was going to buy Victoria's Secret, but that deal actually fell through. So L Brands is reporting on May 21st. Let's see what happens with that because I guess Bath and Body Works and Victoria's Secret are very sort of mall dependent. So they're going to be a little bit challenged.
Yeah, I'm looking right now at a chart. We've got L brands as a whole, only price target of $12, and right now the smart score of only 6, so they're neutral, not terrible considering what's going on in the space. But yeah, Victoria's Secret, yeah, kind of been in a free fall for a while here, so it'll be interesting when they report on Thursday. Just wanted to pull up a chart of Farfetch. This might be a name that's new to some people. They purchase luxury goods from boutiques. Like you said, there are some names that are, like Gucci, potentially not selling through here anymore. But like I mentioned at the top of the call, I think I said they actually had really great earnings last week. They're considered a strong buy, almost 20% upside on that price target. And they reported revenues that grew 90% year over year. So it's going to be hard for you to find a retailer that's seen revenues grow almost triple digits, especially in the first quarter. So this is a name that we like right now. Let's see. However, the smart score is pretty neutral. It's only a 5. That's because of decreased hedge fund activity. News sentiment's been pretty bearish. You've got some issue with technicals, but this is one that I wasn't on my radar and is a little more on my radar now, especially as we're watching how some of these emerge from the pandemic. One last group that I kind of wanted to touch on is the home improvement retailers because they are out this week. Bank of America came out with their March credit and debit transaction data for, recently for March. And of the hardline retailers, this was the only category that showed any growth. And the whole concept is people are in their houses more than ever. They've got time to look around and finish projects that they started and didn't finish, or realize what they don't like about their homes. And so we've got Home Depot out tomorrow, Lowe's on Wednesday, expected to be big beneficiaries of this trend. Both are strong buys right now, pretty decent price targets. Most of the reissued guidance were buys. We got a couple of holds in here from our best analysts, but I'm going to be looking at Home Depot and Lowe's and see how they perform, and then maybe how that trickles down the other areas. We've got Williams-Sonoma out this week as well. Restoration Hardware, some of those might be a little harder hit, but one trend I was interested in was NPD research came out and said the sales of pasta makers were up 5 times or something over March and April. Bread makers, everything required to make carb treats. So waffle makers, all of these things actually had seen an uptick. So perhaps Williams-Sonoma will see some of that momentum. But yeah, any thoughts on the home improvement retailers? I mean, if you go back to 2000, 2001, we were coming out of that recession. People were staying home a lot more, especially after 9/11, and we saw this area kind of as an overall winner during that time.
It's a great category, and one of the things that we look at is zip code. So for Home Depot and Lowe's, understanding how the prices vary by zip code is interesting. So as lockdowns sort of fall off a bit, a lot of the Home Depot clients that are thinking about putting up a fence or putting up something more substantial, buying nails, buying lumber, it's really going to come back to, can they showroom? Can they understand what they're buying? Home Depot and Lowe's, as we look at the data, it's all about assembly and kits and what can I buy on the website that's sort of easy and idiot proof to some extent versus where do I need to go in the store to understand. So I actually don't have the charts in front of me, but we actually do look at price by zip code, which I think is interesting. We also see that in the discounters, frankly, whether it's JCPenney's and Kohl's being a little bit more in suburban areas versus Nordstrom and Macy's. Pay attention to which stores are available and where they are sitting. On the higher end, it's interesting. Wayfair had a great quarter that they announced a few weeks ago. When you look at Restoration Hardware and some of the higher end brands like West Elm and Pottery Barn, you might expect them to not do as well because some of the major buildings aren't even accepting shipping orders. We in Manhattan aren't even able to take possession of the bed. We bought a new bed from Restoration Hardware a few months ago, and we can't even get it. So it's just sitting in some warehouse somewhere. So just being aware of zip code and being mindful of who's open and who's not will help influence how you think about each one of these. But even Target is seeing that everyday low prices leads to selling a lot of this stuff like appliances, waffle makers. So it's a great category. If you stare at your floor every day and wonder when you're actually going to redo it, I think the second you feel confident loading up the truck and putting in the wood and lumber yourself and getting a contractor out, you're probably going to do it. So and plus we're sort of, as we enter the summer seasons, it's time to do home improvement anyway. So I think you're going to see a big recovery in this area. We're already starting to see that with Wayfair and some of the other online businesses for ordering a couch and whatnot. So when you
Yeah.
look at discretionary, it all comes back to, am I enjoying my lifestyle better? Do I have a better home? Do I have that Peloton? Do I have what I need to weather this for a few more months? So I think you're going to see a really great uplift in the category.
Yeah, to your point, Wayfair did amazingly a couple weeks ago when they reported, but they tend to do better in this environment versus to your point about Restoration Hardware, Pottery Barn, some of the higher end, not likely to do as well. Wayfair also has an amazing online business. They're only online, so they're not paying for retail space. So they tend to be a winner right now versus some of the higher end home furnishing stores might not do so well, and we'll see those in the weeks to come. But I think we're going to leave it there. Thank you so much for joining us, Jeremy, and thanks for everyone that joined live. As always, please leave any comments or questions below. We love to hear from you, and we'll be back next week to discuss, how these earnings results came out, earnings for next week, and any new economic indicators that are coming out in the weeks to come. Thanks, everyone. Take care.
Thanks for having me.